Gitlab IPO'd earlier today. GTLB is the ticker. This is a best-in-breed business, so not surprised to see the stock jump over 30% higher. We'll talk about their exceptional financial metrics in just a little bit, as well as their value proposition and how they could be disrupting the DevOps sector, and we'll talk about that in detail. And when I look at this business, around $105 per share, around $16 billion market cap, it is a very rich valuation, around 60 times forward sales. So that is extremely rich for this business. That said, it is best in class. So folks are going to be struggling with this one. I personally look at this and think to myself, in summary, this is best in class if they continue to deliver phenomenal results, and they start showing margin improvement. And this last one, you continue to have an ebullient stock market, a bubblish stock market, then the stock could perform well, maybe 100%, maybe more. But if it's anything short of phenomenal, then I think the stock could have subdued returns over time, potentially even negative returns from here, potentially significant negative returns. So a lot depends on their execution. Will they have continued phenomenal results like they've had? And I'll talk about their exceptional metrics, best in class, in just a little bit. But it also requires, I think, Wall Street continuing to give them just an incredibly full valuation, 60 times forward sales. I'm saying, yeah, let's bring that valuation down to earth a little bit in order to say, hey, what's reasonable longer term? Let's dive right in to understand what's their value proposition, what are they trading at, what do they do, all that sort of stuff. And so here's a disclaimer, which you can read in your own time. And so when you look at it, here it is, the news jumping 35% on their NASDAQ debut. Wall Street is clearly pumped about GitLab. GTLB is the stock, and for good reason. The question is $105 share price, or around $16 billion market cap, too much for this? Does it already bake in exceptional returns where you're now going to have, lousy returns in the years ahead because everyone knows it's exceptional? Now, to dive into what makes this best in class, first of all, look at this revenue growth, exceptional growth metrics and financials, hyper growth, 69% growth, and extremely diversified. No customer representing even 5% of sales. So thousands of customers. Their base customers is about, they talk about these base customers of around 3,600. They generate $5,000 each in annualized recurring revenue. That customer cohort is up. This base customer base is up 30% in just the last 6 months. And so I'm looking at this thinking, wow, they clearly have product market fit that's resonating with the global market. And not only that, they have this dollar-based net retention, which is exceptional. Existing customer base is spending 50% more before accounting for any new customer. So this means all prior cohorts are spending 50% more combined. This is down slightly from 179% as of January 2020, which means effectively their prior cohorts were spending 80% more. But wow, this is just exceptional figures where you have a prior cohorts driving exceptional growth for this business. Their gross dollar retention figures are also phenomenal at 97%. So the difference between gross dollar retention versus net retention, gross dollar doesn't give any credit for customer expansion, customers willing to pay more for something. So this effectively caps out what they could be at. The maximum is 100%, and you subtract out any customers that churn. So that effectively means that 3% of their revenue base churned away. And even this can be accounted for given the fact that 40% of their customer base is non-enterprise, smaller businesses, which should have higher level of churn over time just because they're smaller businesses. Okay, so what does GitLab do? So GitLab is a DevOps platform. Okay, what's that? What's that even mean? It's about enabling the seamless cooperation between software developers and IT engineers. This answers questions like, who's working on what code? What's the timeline to get a project done in terms of making sure everyone's on the same page? Oh, you need to deliver this service by XYZ time. Have we verified that this code works? Is it secure? Does it work within our existing physical infrastructure? Who will release the latest version? What happens if all this code stops working? Who's monitoring it? So what you're talking about with one DevOps solution is something that includes all of these different tools, from, let's say, road mapping what you're going to do to actually planning who's going to do it, the creation of it, tracking it, verifying that it works, who's tracking the code and making sure that it's secure, that it's not breaking things, who's going to release it, all these different things, making sure that, oh, okay, is this actually causing part of our website to break down? Let's check that out. Is this a secure function? And so when you look at all this, it's all about iterating faster and more securely. And faster completion of new features also saves money, because if you're saying, hey, this could take a month, when in reality, if you look at the exact details and you're saying, well, wait a second, this person's going to work on it here and this person's going to work on it there, maybe you can get something done in a week versus a month. And in a software first world, they have the potential to become table stakes for many businesses when you offer this full suite of solutions. Work more efficiently, deliver better software faster, reduce risk and cost. Not surprisingly, their slogan is iterate faster and innovate together, because it's about this collaboration tool and an open source solutions. And they've dog-fooded their own software. Gitlab has dog-fooded their own solutions, saying, hey, we need to make sure that this works for us from beginning to end, a full software suite solution. And that's resulted in them iterating with new monthly updates on the 22nd of every month for nearly 10 years. So they're proving that this works. And it's not just them. Goldman Sachs, you'd think one of the pristine investment banks out there, is a case study customer about demolishing toolchain complexity. Okay, wait a second. Toolchain complexity? What's that even mean? Using this to rapidly launch new features. In addition to Goldman Sachs, that you can probably get from the fact that they have thousands of customers. Look, they have major name brand customers like NVIDIA and Siemens. And so Goldman Sachs is just one of their case study customers. But what's this tool chain complexity that we're talking about? The reality is there are a lot of competitors that offer specific solutions competing in individual verticals or silos. For example, you might mix and match JFrog for your code registry while using Datadog for your monitoring needs. And so you can see here, and they just show like, look, this is what we offer. This is our full suite of solutions all in one application. And you're going to have a lot of competitors in these specific verticals. That said, having a full suite solution could be a real competitive advantage, as you see with Goldman Sachs sort of saying, hey, let's unclutter this business where we're trying to plug, one app with another to try to make it all work together. Instead of this DIY process, let's put it all together, one suite that covers everything we need. And while you'd think, yeah, there's a lot of competition here, there's a real chance that having this all as one single application is an unrivaled value proposition. And their growth rates and user case studies suggest that it potentially is when you look at these metrics like the 150% net dollar retention and their 70% growth rate. So I'm looking at this and I'm thinking, yeah, this is exceptional. But you also need to factor in that they are competing against the behemoth Microsoft. As Microsoft acquired GitHub for around $7.5 billion in stock in 2018, GitHub and GitLab have a lot of competitive overlap, and there's no question GitHub is a fierce competitor, as it's used by 72% of the Fortune 50 to build, ship, and maintain software, including for the likes of Ford, NASA, and Shopify. Still, they're competing in an arena with $40 billion addressable market. So they definitely have the potential. When I'm looking at GitLab, where they're currently operating at a couple $100 million in revenue, they definitely have the potential to 10x from here in terms of their underlying business model. And I think that's part of the reason why Wall Street's giving it such a lofty valuation. Now, if you're going to be competing with Microsoft, you might as well, you got to make sure that you have a competitive business model, a lucrative business model, especially one that has such incredible, financial capacity and reserves like Microsoft. And so when you look at this, most users are on it, are using GitLab because it's open source and easily becomes a system of record for code, sort of saying, hey, who did what and when. So what's the business model if this is open source? I mean, how are you supposed to possibly compete with a behemoth like Microsoft? And the answer is that this business model is geared to selling to management, selling to directors, selling to the chief technology officers or the chief information officers. It's free for contributors. But if you want oversight, who's working on what, who can approve code mergers and faster code reviews, then you're going to have to start paying on a per user basis. Or, hey, we want to have advanced security testing. These things start adding up real quickly. And so all of a sudden you switch from $0 per user per month to $99 per user per month. And that's why you have over 3,000 businesses paying them the equivalent of $5,000 plus on an annual basis. So this can turn into quite a lucrative business model. Now, what about the valuation? I use a hypothetical framework to look at a range of possibilities if things work out. I'm not modeling in a true downside, but trying to consider what investors might be playing for from here. What's the upside that folks are playing for? The stock price can definitely go higher and lower, but it's all based on the execution. This business model is exceptional. They have exceptional results, but if they don't continue to deliver exceptional results, they will have probably an exceptional decline because their share price and valuation is exceptional as well. So in order to think about their future, one should look at the fact that the employees love working there. This is a remote first culture, which should be an advantage for their tax base, given that they don't have a designated headquarters around the world. Employees love to work at it, and happier employees, you can see that in Glassdoor as well, are more likely to get a better outcome because they're happy showing up for work. When showing up for work means you're staying in your pajamas and maybe just go to a different room. So this is, folks, 1,400 folks working in 65 countries around the world. And to understand their business model and what their potential could look like, they have phenomenal gross margins. And you can see that by looking at their gross profit and dividing it by their revenue. It's nearly 90%. This is best in class. They're investing heavily in this business, operating at sizable losses. You can see that while they had gross profit of $94 million, they invested nearly all of that in sales and marketing to get folks aware of this. This gross margin could imply that at maturity, this 90% gross margin could imply that as folks learn about them, and they don't have to invest, let's say, as much in sales and marketing or as much in R&D, that they could have really high operating margins long term, like 40% plus. Maybe they can get a lot of leverage on general administrative. This is currently around 20% of their revenue. Their general and admin expenses as a percentage of revenue. This, in a more scaled up way, could be maybe 5 to 10% longer term. That said, given how many tools or software silos that they're trying to disrupt, you're looking at the whole DevOps space, I suspect this will be many, many years from now before they're anywhere near that type of 40% margin. So this is going to be one of those stocks that's heavily dependent on Wall Street saying, yes, I'm a believer that they're going to deliver on these margins. Any sort of hiccup could send this much lower. And so as I look at this business, and this is really important because you have a lot of investors that just look at things and say, hey, what are your historic financials look like over the last 5 years? Or what are your most, what's your share dilution? What's this, what's that? And they're just looking at set financials and saying, based on that, thumbs up, thumbs down. And that is a really flawed approach because you're avoiding the key aspects for judging a business. You need to say to yourself, is this business unrivaled? What's their addressable market? And that's what I tried to address in this video. So that way I can think, okay, what could this business look like in the future? The folks that are buying and selling stock in a big way, they're not looking at this, thumbs up that this, the free cash flow over the last 5 years has done that. That's not how the major institutions are working. I used to work at a major, multi-billion-dollar hedge fund. So I know, and before that, I worked on the sell side shop where I interacted with billion-dollar institutions on a daily basis. So I do have a little bit of insight to say, hey, this is how the sausage is made. This is what other folks are considering. And when they're doing it, they're generally looking at something like this, thinking about what could this business do in the future? What could their margins look like in the future? What's the addressable market? Do they have this potential to be much, much bigger in the future? And these are the things that I think the major institutions that move this stock over time are considering. So as I look at this, around $105 share price, around $16-17 billion market cap, I use a more diluted share count based on their prospectus. That is a very full valuation, 60 times sales. The question is, can they grow into it and potentially exceed it? And they're currently growing around 70% this year in revenue. Maybe they surprise higher and it goes even, accelerates from there. I'm saying folks are going to value this on their long-term margin potential. So I'm saying 30 to 40%. Given the fact that they're trying to disrupt DevOps and this is going to be investing long-term, that's why I'm not doing, let's say, 40 to 50. I'm saying, let's taper that down a little bit. That said, the growth rate that I'm assuming in the years ahead really is very, very high, 40 to 60%. I could be way off here. But part of this is the fact that their net dollar retention of 150 something percent plus, that is exceptional. So even if that goes down to, let's say, 120 or 130, that means their existing cohorts are still growing at 20, 30%. Layer on new customers, and then you're growing very quickly. So this, if they're able to continue to execute like they've done, continue to monetize like they've done, and you get a very rich multiple over time. Like they're not at 60 times sales 5 years from now. Let's say they get to 45 times earnings 5 years from now, based on these, the sort of the metrics I just called out. Then you're saying nearly 200% upside. But that requires just crazy continued, exceptional, phenomenal, just amazing results, like mind-blowing. You could tell I'm like short-circuiting even talking about it, because I'm saying effectively that you're going from under 300 million in revenue to nearly 3 billion in revenue over the next 5+ years. And so that'll be tough. Like if you achieve that, there's the potential for the stock to do really well. But if it's anything short of phenomenal results, and Wall Street sort of says, you know what, maybe we don't want to give full credit to these margins. If you have that, then I could easily see this thing dropping significantly. I'm not focusing on this. I'm not focusing on like, hey, what happens if Wall Street behavior changes? Like if Wall Street behavior changes, easily 50% down, easily. Like that's why it's important to consider. So I think, if you still have an ebullient market, they continue to execute, you're looking at 100 to 200% potential growth in the years ahead. That said, anything except phenomenal could be subdued or a lot worse. And, there is, you will notice I am using a lower tax rate than usual. I'm putting 5% versus 25. Part of this is because this is remote first. They could, say, hey, we're headquartered anywhere, and just be, maximize their tax advantage. And plus they won't be paying taxes for a very, very, very long time. And so overall, I'm looking at this and I'm thinking to myself, I like what they do. I think this is a best-in-class business. For all the software users out there that use GitLab versus GitHub, or use GitHub instead of GitLab, I definitely want your feedback. So leave some comments below, in this video. I personally think the multi-baggers I've called out, I'm a little more confident in. That's why I personally own them, and that's why I'm usually penciling out like, oh, I think this has 200% upside, and I don't have to make Herculean assumptions like this. That's generally how I'm thinking about it. If you want to follow my personal journey in terms of what are the potential multi-baggers that I call out each month by the end of the month, or what do I personally own, go to unrivaledinvesting.com, click join the journey. We also have this exclusive server where I'm interacting on a daily basis on Discord. So I really recommend you check out that Discord, because that's a lot of fun and shows a lot of history of individual companies that we talk about. And it's a really thoughtful community. And if you enjoyed this video talking about GitLab, GTLB stock, please make a point of hitting that subscribe button, hitting that thumbs up button. Thanks so much for watching.